Hello, everyone. I know that everyone's looking forward to lunch, so I'm going to make this as short as possible. So who are we as Mediterrania Capital Partners? We are a 1.2 billion euros assets under management sector agnostic fund that invests in mid-cap companies with a focus on North and Francophone West Africa. We sit on the continent, so our investment offices are in Casablanca, in Abidjan, and in Cairo. And as you can see here, while our portfolio companies are focused in terms of geographic focus, however, they operate across over 20 countries in Africa, and they touch the lives of hundreds of millions of Africans. So when we talk about sustainable development, we usually gravitate towards pitch deck terminologies like mega projects, multi-billion dollars, unicorns. We have one of our LPs here. He's very happy with us creating 2 unicorns on the Casablanca Stock Exchange already. But usually the real development happens when you look into a far less glamorous space, when you look into the SMEs and the mid-caps, and these represent like the backbone of our social structure and the backbone of our economy. So why do they matter? Because when we invest in companies that employ over 27,000 people, actually 10,000 of which have been jobs that were created by our portfolio companies since we started investing in them, you can see the real impact of what we do in that space. So African SMEs and mid-cap companies, they represent over 80% of employment. That's more than 500 million people. They generate over $1.5 trillion in terms of GDP. However, they have access, less than 15% of them have access to long-term capital across all asset classes. And this is where we as private equity investors must come in. So why are they so underserved, honestly? And that's why our job is very difficult, because it's not about growth capital, it's about what we do after the investment. It's a very fragmented cluster of companies. They are so undergoverned, so underserved, that there's a huge gap between the capital readiness of them and what we expect from these companies to deliver to us as GPs and, of course, by definition, as our LPs. So we kind of spend more time when it comes to portfolio management, when it comes to what we do in these companies after we invest, more than the time that we spend in deploying these capital. So our focus is usually on family-led businesses and on entrepreneur-led companies. And usually these are very much entrenched into traditional multi-generational habits or traditional cultures or traditional way of doing business. And once we get in, we have a very specific strategy of value creation that I will be telling you more about in a bit. But honestly, for me, getting into private equity is, and especially growth capital, it is not just about putting money into a company, but it's about, for example, one of the major things that we've done so far, we invested in a company in Egypt in packaging. And this company has recently, and by virtue of us driving the strategy to be more regional and more diversified, they are started to export more of their products. So going into a Boots here and flipping a bottle and seeing that it's been made in Egypt, it's something that we take very much pride in, because we can see the real impact of private equity into African companies. So going back to so basically we serve more than 100 million people through our portfolio companies. And going back to what we do in terms of value creation, we have a very specific repetitive value creation model that we deploy across all of our portfolio companies. And it is a multidisciplinary model that governs basically everything in the organization. So just to give you a bit of a headlight, so we know the guts of the business is basically knowing everything. And when we start a value creation strategy in our companies, we started way before putting the money inside and way before injecting the money into the company. We have a purpose-driven organization, and we make sure that everything regarding reporting, regarding alignment, regarding merit-based incentives for the employees and all of these things is very data-driven. We have always part of what we do is that we back entrepreneurs and family-led businesses, and we back management into achieving the next stage of the growth. So the right person in the right place is very important for us, especially when it comes to strategic management. We have KPIs, we have social operating system. I don't want to be taking too much of your time. And of course, part of the things that we very much start with is the governance structure and the HR processes. So just to give you an example, when we invested earlier this year in this company in Egypt, basically HR was almost non-existent. They didn't have formalized boards, they didn't have formalized committees. And to get a family-run business in Egypt to adopt an audit committee, an HR committee, an investment committee that has to go into the IRR of every specific investment that they need to make and all of these things, believe me, this is a very, very, very hard job that you sometimes take weeks to implement just the conversation of it. So again, I want to go back to the idea of development and the idea of ESG. ESG for us is not just about compliance, it's not about reporting. I'm from the investment team, I'm not from the ESG team. And yet we speak that in our day-to-day investment decisions and our day-to-day portfolio management. So for us in Africa, it's not just about, and we don't see it as a compliance requirement as much as an existential requirement for our companies. So you can see that SMEs in Egypt, if they don't have an audit committee, they are susceptible to fraud. And a mid-cap company that doesn't have an angle to digital transformation will be disrupted. And businesses that don't have a keen eye on the workforce environment and how much the labor rights and all of these things will face strikes and attrition and reputational loss. So we see these things as very much embedded into our operations of these companies, and we see the merit of that. We see multiples that exit are better, we see retention of better talent, and we see cost reduction. So for example, in a packaging company, if you invest in machinery that is more serving your recycling requirements or your material consumption requirements or all of these things, they immediately transform into better margins, better financial performance, and better operations overall. So I don't want to take too much of your time, but I just want to tell you that it's not an easy job. It's very challenging. We have structural issues in the economies that we invest in. 10 years ago, or actually 5 years ago, a company in Egypt that was generating 150 million Egyptian pounds in revenues, that was $10 million. Today, this year, if they generate $500 million in revenues, that's still $10 million by virtue of the devaluation. So it's a very difficult uphill exercise to make sure that we balance all of these things, not only on the micro and the portfolio company level, but also on the macro level, and how we can come up with strategies that not only drive growth, but also de-risk the environments and the ecosystems in which those SMEs operate, because without that guidance, we can see a lot of them getting wiped out when there are structural shocks in the economies in which they perform. So I just want to say that finally, when I get asked, don't you face a lot of competition from private equities, from a lot of funds looking into the region that you're looking in, I tell them we actually need much more. It's a very shallow capital market. We need more funding to go into that space. We need more education. We need more, because the whole point of the business model actually being sustainable and successful is the idea of replication, is that when one company takes in private equity, growth capital, and they go through the process of governance and they go through the process of transformation on an institutional maturity level, and they inspire other companies to do that, this is exactly what we need to go for. We need that most of the SMEs and the mid-cap companies in the region actually ask for better capital, better quality capital, and better institutional presence in their boards and in their shareholding structures in order to be able to take them to the next level. So this is it. It's it's an uphill exercise, but hopefully we get to do it all together. Thank you very much.